Hello everyone, Jim DesRocher from TrueView Financial. I hope you're doing great today. I want to share something with you. I get asked a lot, what makes me different, or isn't every financial advisor the same? Well, I started in the industry in 2007, and I quickly got into the Great Recession of 2008, and my first 2 years in the business, I saw people losing everything in their investments, and it really changed their life and had a huge negative impact on what they were trying to create for their life and for their family and for their wealth. And during that time frame, when I was looking at it, I was doing the same as every other financial advisor. So I understand when people think, aren't all financial advisors just the same? It's great to have an advisor, but is there really any difference? So when 2008 happened, and I saw people losing everything, and really there was no accountability, I thought, for the financial industry or for financial advisors. The answer was, this is what we all do, and this is just part of it, and just deal with it. And for me, that wasn't okay. I couldn't sleep good at night. Just getting into the industry, I didn't have a lot of clients, but I knew I couldn't create my life around just having my clients have to deal with it. I couldn't sleep at night. So I went out and saw there's gotta be a better way. A way where we can take all this uncertainty and create just a little bit more certainty around it. Is the way Wall Street invests, is that really the only way there is? Wall Street typically is trying to predict the future, which we all know can't be done. And if your investment strategy is based off of predicting the future, how often are you going to be wrong? But what I found was that more often than not, investors are earning significantly less than what the investment markets return. So I'm going to share a graphic with you that shows on average the investment markets earn around 8%, and the average investor is only earning around 3%. Now that's less than half of what you should be getting. So to me, there's got to be something wrong, there's something broken here, and how can you do better? So early in my career, I saw after as much, I knew I had to learn more, I didn't know enough, and I had to figure out a solution to this problem that creates some more accountability, some more peace of mind around your investment so you know you're doing the best you can. And I had some great mentors, and I went through a lot of coaching and training and education from one of the best and brightest universities in America, University of Chicago, in the Booth School of Economics. And what I learned is that the financial industry typically gets all the information about investing from Wall Street. The strategies, that's where they come from. That's what financial advisors are taught. So yeah, we are very similar in that regard. But I had just a drive to figure out a better solution based in academics. And that's when I went to University of Chicago, and I found out that University of Chicago had more Nobel Prize winners in economics than any other university in America. They have over 16, and they have almost 100 total Nobel Prize winners. So I thought that was a really great place to start. So what I learned in 2013, Eugene Fama, who's considered the father of modern finance, won a Nobel Prize for what he called the three-factor model. Harry Markowitz discovered modern portfolio theory in 1954. He also later on went to win a Nobel Prize. And there was actually a psychologist who studied investor behavior, like investors like you and me, and won a Nobel Prize for that. So what the three-factor model is that what they all learned was it's really, when it comes down to your investments, is how do you increase your return and decrease your risk. Right? Risk is, could you potentially lose all of your money in your investments? And I think that creates a lot of nervousness and uncertainty. And what the behavior psychologists found out is that's what causes a lot of us to not earn as much as we should. So you need to know why you're doing what you're doing. In order to increase your return potential and decrease your risk, is follow the academics, the Nobel Prize winning research. Hopefully that will give you some more peace of mind, reduce your uncertainty so you can feel better about making better decisions. So simple, the three-factor model is there's different types of assets you can invest your money in. You can invest your money in T-bills or bonds, or you can invest your money in stocks or equities. And what they looked at is over the long run, going back over 90 years of academic data around the stock market is what they found is that stocks over the long run have over an 80% chance of beating bonds. So there's a place where we can get more higher return potential. And what they also found is you can invest in large companies or small companies. And again, what they found over long time horizons, 15 years, is that small companies have a greater return potential and have earned more over the long run than large companies. That one was really interesting to me because most of the time what I see when new clients come into our office is more often than not they're invested significantly in large companies and very little, if sometimes no, small companies. The third fundamental is you can also, that stocks you invest in can also be value companies or growth companies. And what they found is over 90% of the time in the long run, value companies outpace or out-earn growth companies. And again, most of the time what I see when people come in to see me, their investments are all in growth companies, not value companies that have a higher return potential in the long run. So all these things can help you reduce your risk and understand why you are doing with your investments. And hopefully those things combined will increase your rate of return, help you get much closer to reaching your financial goals. So if you are uncertain or nervous or not sure if you're doing the best you can with your investments, please come in. We have great tools, resources. We're more than happy to give you a complimentary meeting, talk about your goals, your strategy, and how can we help you better get there, right? It's very easy to do better with your investments. I'd love to share that information with you so you can reach your financial goals. Please reach out to us for a complimentary consultation. You can schedule right on our website, www.mytrueviews.com. Thank you very much.